Hi, I'm Robert Maltbie. Welcome to Maltbie's Minute on the Market. It is October. We're going into the fourth quarter, and we've been through an attrition lasting probably about 6 months of back and forth of reverting market growth versus value. Are we setting up for a bull run for the fourth quarter? That is the question. You know, September was a pretty tough month. So let's look at what we have in our major market indicators to update us. We think we have a bull under duress. There was a perfect storm of negative sentiment, including the lingering Delta virus, the uncertainty of the government stimulus efforts, and looming tapering and a global supply chain disruption have caused the bull market to pause. We're looking to work through that. On balance, our indicators show that we will, led by market sentiment, which has turned very negative, which is positive. The VIX and the VXN are both positive. The put-to-call ratio on the S&P index, 1.63. Importantly, bulls are now outnumbered by the bears. The bull-bear ratio is at a 6-month low of 0.69. That's positive. Liquidity indicators, very positive. Money market funds are at 4.5 trillion, which is greater than 10% of the total market cap of the stock market. This money market fund level is above the historical average cash level. The September equity capital flows into the market were also positive. This was led by buybacks, up 72 billion, led by Microsoft in a $60 billion buyback. Also, ETFs and mutual funds experienced $4.5 billion in inflows, hedge funds $3 billion, and M&A at $7 billion. Outflows were equity issuance at $48 billion and insider selling. All in, we had a positive month, and additionally, the Fed continues to pump with the QE, $120 billion into the system to backstop financial markets. Liquidity is very positive. Our monetary indicators also show a stimulative Fed. We're looking at money supplies diminished, growing only 10%. It was up 25%. That is inherent tapering. The Fed is still adding 2.3% stimulus. This is factoring in money velocity, which is negative, and GDP, which is positive. Still stimulative. Fed looking to err on the side of overstimulation. There's been a lot of talk about supply chain disruption and inflation, and that looks to be a bet that would lose in the intermediate run. The bond market says no way. The bond market is barely budged at 1.5. Also, the core CPI, ex food and energy, is a stable 2.0. So the indicators do not show inflation being a massive threat. Moving on to the Singular Research Director's Letter, that too is impacted by a negative down month. Equities were down across the board. The S&P had its worst month since the start of the pandemic, and it ended a streak of 7 up months in a row with a decline of 4.7%. Looking at the indices, the Singular Research List was down 3.8. The S&P down nearly 5. Year to date, the Singular Research List up 46% plus versus 16% for the S&P 500 and 12% for the Russell 2000. Over the last 12 months, the difference is even greater, with the Singular Research List up 112% versus 31 for the S&P and 48 for the Russell 2000. This is wide outperformance by the Singular Research List. Now and finally, for our stock of the month, it's Russia, Russia, Russia. The Russia ETF, 2X, 2 for 1 for your money, symbol RUSL. Russia is the beneficiary of increasing energy prices. The outlook is positive short-term and intermediate term for Russia. The country ETF trades at 9 times trailing 12 months earnings and energy is 35% of its GDP. The GDP was only down 2.9% last year, less than the US. The dividend yield is very attractive in the Russian market at 5%. Now, Russia holds 30% of the world's known natural resources, which are actually 60% of the GDP, and the world's largest natural gas holder, the 8th largest oil, and the 2nd largest coal holder. They're a major supplier to Germany and Europe, which is experiencing acute shortages. Big shortages are expected to continue for the next several months. Significant upside potential with Russia trading at 9 times earnings, exposed to energy. So, we're on the bull side. We think the year is going to end up being positive, and we look for good outperformance. Stay with the singular research list. I'm Robert Maltbie. This is Maltbie's Minute on the Market. Thank you.